Hello, everybody, and thank you for joining me today. I've got another Italian-Berry Labucan from Rocks and Stocks News. I've got a special guest today, Rob McEwen. Probably needs no introduction in the mining business. At one time, he ran the lowest cost gold producer in the world. And now he's got a gold and copper story at his McEwen Mining. They made some big news yesterday. And I'm happy to have Rob on the show today. Rob, thank you very much for joining us.
Alan, it's a pleasure. Thank you.
So you got a heck of a copper project there, top 10 in size, low cost, and I don't think the market's given you either much value for that or much value for your copper assets. Let's talk about that, Rob.
Well, I agree with you on both counts. Sure. The copper, well, actually, Los Azules is the main copper project we have. It's located in San Juan province in Argentina. San Juan province is northern Argentina, and the property is on the boundary with Chile. It has a resource of indicated and inferred resources of 29.5 billion pounds of copper, 5.5 million ounces gold, and 191 million ounces of silver. The gold and silver are low grade, but if you were to take this deposit and use current values in the market for gold, silver, and copper, and say, how big a gold deposit would this be if you converted it all to gold? It'd be bigger than a 60 million ounce gold deposit. And the preliminary economic assessment that was done suggested it would be producing 415 million pounds of copper a year for the first 13 years. Translate that into a gold equivalent, that would be over 800,000 ounces a year at a cost of under $600 an ounce. So just to give you a sense of the magnitude of this deposit. We're moving ahead on it. It had limited access until this year. There was a road that would allow us to get in there essentially 5 months of the year, and it was closed for the rest because you had to go over 2 high mountain passes. We created a second access route now, so we now have year-round, we can have year-round access to the site. And it's, we've been drilling, and we will be producing an updated preliminary economic assessment incorporating the costs of capital and equipment, and that'll be out in the first quarter of this coming year, 23. And
So,
then in the sorry,
Rob,
go ahead.
Let's start with this news you guys put out. Rio Tinto put a bunch of money into the copper asset, and they're bringing a technology that looks quite exciting from what you can figure out so far.
Yes, we just completed a financing. Took a while to complete. I was the lead order. I personally put in $40 million to get it started, the work on Los Azules. And we raised some money, I guess another 15 million. We announced that earlier this year. And then an arm of Rio Tinto, which is the second largest mining company in the world, they came in for 25 million through their technology arm. And it's called Newton Technology. It's proprietary heap leach recovery process. And we're looking at using a heap leach process in the first 13 to 15 years of operations. And
then you would go underground.
No, it would be an open pit.
Oh, okay.
I guess one day if we found much deeper mineralization, we could go underground, but right now in the PEA, it's had a 36-year life. So
That'll
this
keep
is,
you busy.
it'll keep you busy. We do think there's potential at depth. There are a couple of strong geophysical anomalies or signatures that we'd like to explore this year.
Yeah, I
There,
remember that from the last conversation we had. You were talking about the potential that you could go deeper.
yes, we've drilled the shallow anomalies that were generated, and they came up with high grade. And we just came down approaching the side of one of these large, deeper anomalies, got good grade. So we're targeting a few holes into, there's one at the south end and another at the north end, which we'll be testing. And some of the results that have been coming out from other projects in the province suggest that there are deeper roots throughout. They've experienced them. We think we have them as well. But so we'll be doing a heap leach process. We like it because one, it's lower capital, so easier to get in, and when
Start
people
making
look at
money.
and say this you can finance. Some of the other ones, maybe not. And it uses less water, and water is a very critical element in this part of Argentina, and for that matter, throughout the Andes, Chile and Peru. So we're looking for ways that we
Even
might.
up into Nevada, there's a lot of places where that's an issue.
That's right. So this technology will be tested on our ore. It's been sent out already. We should have some initial results in the next 3-4 months of the applicability of it to our ore.
So would you be able to use those statistics in your PEA?
Not, I don't know if we'll have those numbers by then. Certainly, if we do, we'll plug them in, because that would have a big impact.
See, I understand. Well, it wouldn't take you much, a long wait once you do get the numbers to update the PEA if it comes out before before you can plug them in.
That's right. The shareholders, 4 shareholders own 97% of the McEwen Copper, which is still a subsidiary of McEwen Mining. But so McEwen Mining has a 68% interest. I have just under a 16% interest personally. The venture arm of Rio Tinto is just under 10 at 9.7. And then when there is a group out of Australia, the Victor Smorgon Group, they're just under 4%.
So I think it's a pretty good sign that they think their technology can help you guys. They put a chunk of money in to test it.
Yes, I think it's when you look at the size and depth of experience of Rio, we could benefit greatly from their involvement in
Well,
a number.
that brings up another topic, Rob. You know, I'm very bullish on copper. We're seeing a revolution in the way that people are moving stuff around, and and even if you want to, change your power sources, you got in the United States, they're using old power grids that need updating. We're going to need a lot of copper in the future, and Rio Tinto is quite aware of that. They recently took a run at Oyu Tolgoi in Mongolia, and they got rebuffed, and now they put another bid in. So these kind of actions by majors is a pretty good sign that the supply side of the story needs some help.
Yes, and you're seeing more and more articles on just that fact. If we go all electric, and the auto manufacturers are coming out and saying we're going to have all our production electrical vehicles by 2030, 2035. But there's a large projected deficit that won't be made up by recycling copper um, and other minerals, substitute minerals such as aluminum and that or materials aren't as good conductors. So and it's taking longer to get mines started, the permitting process and the capital required. So we think we're in a sweet spot, as you said, projected low cost, large deposit. We're in a province of Argentina that is very pro mining. Barrick operates in there, Yamana was in there, Fortescue's in there, Glencore's in there. You're seeing large investments in lithium taking place in the country, and they're starting to change some of their ways to further incentivize the industry. I think.
And I think that this consolidation trend is just getting started, really, Rob. But I see some actions that are suggestive that the majors are trying to buy on the cheap. But there's been one buyout recently, Jose Maria, that could be relevant to your valuation.
Very definitely. Jose Maria was purchased by Lundin Mining in April of this year for 485 million. It's in the same province as we are. It's a little further north. But when I look and compare Jose Maria to Los Azules, there are a couple of differences that really stand out. For one, we have more than twice the resource base that they do. Second, our grade is higher. Third, we're closer to infrastructure, roads, and power grid. Fourth, and probably very important, we're at a lower altitude than they are. We'll be operating between 3,100 to 3,600 meters, and they're operating above 4,000 meters. And the importance of that, there are three reasons it's important to understand, but probably the most critical is it's into an area where the glaciers exist. And glaciers are something not to be bothered. You don't want to disturb a glacier, and particularly in a place that needs a lot of water for agriculture. So we don't have that. Also, the other concern is your machines don't operate as well, internal combustion engines at altitude, and people don't operate as well at higher altitudes. So on those three counts, I think we have a big leap.
I know a little bit about that altitude issue. When I was a young lad, I went forest fire fighting in the mountains in British Columbia, up above the tree line, and it's something else trying to work at those elevations.
Yes, you notice it when you try to run or climb stairs quickly, or hills in your case.
Yeah, and I was a young hockey playing young guy, so I was in pretty good shape then, and it was something else. Now, getting back to Jose Maria, had they done any analysis of their cost of producing the copper?
What we've seen now, I have to say their project is more advanced than ours. They have gone through a feasibility study, and we're earlier stage than that. And they've just received an environmental permit to start construction. It has a large number of conditions attached to it, but they've got their permit, so they're further ahead. They were a public company, whereas we are still private.
Right.
But comparing the PEA to their feasibility study, which might not be fair, but we would be a lower cost producer. And Goldman Sachs put out a chart, and they plotted the costs of all the undeveloped copper projects. They included ourselves and Jose Maria. There were about 100 companies in there. We were in the bottom cost quartile, and they were in the highest cost quartile. So that's a big difference there. So I look at it and went, well, what could be the value of Los Azules? And I take the the value that Jose Maria got of 485 million. And I said, well, let's just discount that by 50%. Say it's only 242 million. And McEwen Mining owns 68% of this deposit. So that's 165 million, and divided by our outstanding shares of 47.4 million shares, and you get a value of $3.48 a share.
That's by cutting that valuation in half, but your project is double the size.
Yes. So,
So
if you
you're-
said, well, let's just use the 485 million as the number, and you're up to $6.96 a share value behind every share of McEwen Mining. And if you said, all right, we're twice the size, so let's just give a 50% premium over their price, and you're up
to
over
$10.
$10 a share.
Wow.
So,
So it's
so at your point about,
your
your point about,
sorry, go ahead.
I was just going to say, you had said earlier on that there seems to be there's a big discount in our price right now, given the value of the assets we have.
And you could also make the argument that, low cost production really matters. It's no matter what commodity you're looking at, those are the companies that get the highest premium.
Yes.
In relative to their peers. So, however you want to slice it, I think there's a strong case to be made that the whole of McEwen Mining is undervalued on the copper asset alone relative, and the gold is free.
Exactly. And we're guiding 150,000 to 170,000 ounces of gold production this year. We've had the past couple of years, there's been some real challenges delivering on the gold. The turnaround looked like it was happening late last year. And then in the first quarter, we got hit by COVID and equipment failures across our 3 producing mines. In the second quarter, the 2 were back where they should be delivering, but the third one was still lagging, and it's now pulling ahead. And we hope by the third quarter, at the end of the third quarter, everybody's going to be running the way they should be. So it's moving along nicely now, but you've got the copper that is a big part of the value, and that I had always felt it was undervalued in the company. One, because it was inside the company, not as a separate public company. And investors have a preference for a pure play, a pure copper company or a pure precious metal company, but not like us, where we were a troubled precious metal producer with what would be a cash-hungry copper company.
Gotcha. So you have in the works a plan to separate those 2 companies.
Yes, and that's why we're thinking of the IPO within the first half of next year, after we've got an updated PEA, preliminary economic assessment.
Perfect. So you got an endorsement by Rio. I
Yes.
think it's fair to call it that. They put a good chunk of cash in, and they're going to bring some technology to you. You have lots of news coming out, it sounds like, from your copper efforts, and some optimistic news coming from your gold assets as well.
That's right. We've been reporting losses, operating losses, and that's a function of the large amount of exploration we're doing. And I've always been a big fan of exploration. It certainly drove the growth of GoldCorp. And we're in prolific areas. We're in the Timmins camp that's been going for more than 100 years and produced over 70 million ounces of gold. And if you look at the structural trend we're on, called the Destor-Porcupine Fault, it runs into the next province, Quebec. And along that structure, there are numerous mines that have more than 140 million ounces of gold production over that 100-year period. We're in Nevada, below Barrick and Newmont's largest gold mine, Cortez Hills, and the discoveries around it. So we're in good real estate. And then down in Argentina, we're in an area in lower Argentina and Santa Cruz province, the Desierto Massif, which has a number of mines, but it really came into the fore and just since the mid-90s that you started having these discoveries and mines brought on stream. So we're in good areas, and we're working to expand our production base and just bring our costs down.
Well, I'm really interested. I've been sharpening my pencil lately on that Timmins area because High Gold Mining, their main asset is up in Alaska, but they've also got this interesting project right beside you in Timmins, and that looks quite exciting there.
It was one of the highest grade mines in the Timmins district. Yeah. We're looking for more of that too.
And you guys are right on the structural trend there, and that's what brings those high grade fluids to the surface.
Exactly.
And I'm just going off my memory a little bit, Rob, but we talked about that stuff you have in Timmins in the past. Tell us a little bit more about that.
We have 3 locations in Timmins. There is what was called the Black Fox Mine, and there's some satellite deposits that we've started mining. The Froome deposit, and about 3 miles to the south on the same property package is what we call Gray Fox, and there's over 1 million ounces that's been outlined there, indicated. The Black Fox and our Stock Mill, which is about 20 miles away, closer to Timmins. It's when you combine the two, we're just approaching 1 million ounce mark in terms of historic production on these properties.
What stood out to me was the potential for deeper exploration. I think that's what got me excited about what you're doing there.
It's in a geological setting that has what they call deep roots, where the deposits go down quite a way. You can get down to over 2,000 meters. And the mines, the properties we're on, the mines have been fairly shallow, 800 meters and 300 meters. Now, we do have some isolated results. At Black Fox, there's a 55 gram over about 7 meters down at about 1,000 meters down. So 300 meters below where the workings are. And at Stock, there's a 27 gram over 7 meters. And we're just trying to get closer to that because it's suggesting the roots there are deep roots here as well.
Well, and that's where you got your gold. A lot of your gold fame came from was at GoldCorp. You guys had to get down below the 1,000-meter level to get into those jewelry boxes, and those jewelry boxes continued for a long ways.
Absolutely, absolutely, and that's what first attracted me to these assets in Timmins. Was just it would be described as a nuggety deposit, but high grade. I mean, there were a couple of areas where we were up over 300 grams, and it sort of made my eyes pop a bit. I said, okay, that's way above the average for the district. Is there more of it? And so we've been drilling, and sometimes it takes longer than you hope it will take, but we're still getting good results and expanding our resource base. We have a preliminary economic assessment to develop these properties and under the name of the Fox Complex, but we can see another 10 years in front of us at lower cost, doubling the size of production. What we're working on right now is to see if we can get a larger, to find more resources closer to surface that would shorten the payback period, which to me right now is too long. It was up to 6 years, and we're hoping to bring it under 3 years with our exploration.
But
We have that.
will you still poke some holes deeper? I think that a lot of people in the world would stand up and take notice if it looked like Rob McEwen found himself another GoldCorp type asset.
Some would say it's about time.
So do you think you'll keep poking some deeper holes to look for those jewelry boxes at depth that are cheap to mine?
Absolutely. Yes.
Because
That's very much
that
part of our plan.
wakes
We have
you up. Low cost and high grade gold wakes you up in the morning, right, Rob?
bright and early.
And then down in Nevada, you're beside a monster, and some have suggested a couple geos. I know that you got a lot of exploration potential down there as well.
We have a lot of ground. We brought some of our Argentinian geologists up to take a look because it's their winter right now. We just thought we want more geologists on the ground, and they did some more mapping, and they're excited about a couple of the areas they uncovered, which we'll be working on this fall and next year. So.
Well, you got your McEwen Mining has its hands full, and I think you're pretty excited about McEwen Mining in the gold and McEwen Mining in the copper.
Yes, well, there's been a lot of printing of money. There's too much money out there devaluing the value of the dollar, and I think we're in a good space. We have the ultimate financial asset, gold, we're producing. And we have the metal of electrification that will clean the environment as we move forward.
So you got gold, and green gold.
That's right. That's right.
You got the golds covered, and you've got silver. So you got the poor man's gold too.
Yes.
Well,
in Mexico, we're looking. The mine down there is on residual leach right now, but we're looking at, we have a preliminary economic assessment there, or actually a feasibility study for a 10-year mine down there. Not large, but low cost. And we're just doing the final details on that as well. And it's silver and gold as well. So Argentina is gold and silver, and as is Mexico.
I live in Zacatecas, Mexico, in the central part of the country. So maybe I'll have to take a drive up there to your gold asset in Mexico one day.
You're more than welcome.
I'll bang on the door. Let me in. Rob said it's okay. Well, I want to thank you for coming on the show. It's been a while since we last talked. What I was really excited about back then was the turnaround potential on your gold assets, and that your copper was getting no respect. The Rodney Dangerfield asset. Now it looks like you've got things moving in the right direction for the gold to turn around operations, and some exploration potential as well. And the Rodney Dangerfield asset of green gold there looks like it's going to get more respect when someone like Rio Tinto opens up the checkbook and thinks they can bring technology that will help you with your asset. I think that's a pretty good endorsement.
Yes. Yeah, I would agree. And thank you for seeing it that way.
Well, I hope to have more of these. It sounds like you've got good news flow coming up, Rob, so we should do more of these.
I'd be happy to do that, Alan.
Awesome. And let me close it off, Rob, and we can chat at the other end.
Sure.
Okay, folks. So In McEwen Mining, you've got a restructured asset that doesn't have a lot of stock out now. They've got turnaround potential with an exploration potential on their gold assets. Now things are moving ahead quite aggressively on their green gold asset of copper down in Argentina. Rob made a great argument for the valuation gap just on the copper asset alone, looking at recent takeovers. And then you've got this consolidation that's starting to happen in the industry where the big miners are trying to get their hands on more supply because they see the green revolution coming with the, what's happening with automobiles, and the world needs, United States needs to rewire their whole electrical grid. Other countries are building off of building new electrical grids. There's a lot of demand for copper coming up. In fact, years ago, even before the automobile revolution, I remember reading a report by one of the big analysts out there that we needed to find an Escondido every year just to meet the needs to look after the emerging and the developed countries. And this was before the electrical car revolution came along. So there's just not enough copper out there. There's not enough copper mines. And Los Azules is a top 10 in size of undeveloped and in the bottom quartile of cost. Those are the kind of things that get developed into mines and taken over at big premiums. And this company right now is trading at a discount to their copper asset alone, and you get the gold for free. I like the sounds of that. And on that note, as always, my shows are for information purposes only. Speak with your financial advisor before making any investment decision. Do your homework. Go to McEwen Mining's website. They got lots of corporate presentations, lots of news. Do your homework on these guys. I'm a big proponent of doing your homework because I think investors that do their homework understand what they're investing in and don't get caught in the gyrations of the market, and they can look at what they're investing in. And I think McEwen Mining offers a very excellent opportunity for investors that are bullish in green gold or old-fashioned gold. On that note, have a great day, and we'll talk to you soon.